to coming in. So let's give it 1 more minute. I'll come back in and probably do a quick intro, and then we can kick off our webinar for tonight. I would probably start now. So thanks for everyone joining today's webinar. And I can see we got attendance from different regions. Some are Hong Kong, Singapore, some are even from Australia, some are in the US, UK, Middle East, so different time zones. Right now I'm in Hong Kong, so it's nighttime. And thanks for everyone for joining this meeting with us. So to give you a quick intro, just if for those people who don't know who we are, just a quick recap on our business that what we do here at Odin. So we are an Australian expat company. We only do two things simply, which is Australian mortgage and Australian tax, purely designed for helping Australian expats or foreign investor to handle their mortgage and tax business back in Australia. So our mortgage team works in terms of helping you to get finance with your foreign income, and our tax is here to help you secure your non-resident status, protect your overseas income, and complete your tax filing back in Australia to stay compliant. Myself, my name is Pau. I'm a partner here at Odin. I look after the tax team predominantly. My background, I've been here since I came back from Sydney to Hong Kong, which has been 10 years. I have been doing the same thing for the last decade, which is assisting Australian expats living overseas to handle their tax as a non-resident of Australia for compliance and protect your income from being taxable in Australia. Just a quick disclaimer that this section is just very basic generic information. The information used here can also be seen from ATO website. If you would like to get a personal consult, I would suggest you to talk to our team or talk to your local accountant, that someone you're using with, or you want a more expert expat tax advice, yes, please feel free to talk to us. So this is the first episode of our 4 sections webinar. So this is the first one in January. We're going to have 3 more starting from Feb, March, and April. We will be covering topics from, this is the first one, which is the tax residencies. What is your tax residency in Australia if you're living overseas? Down the line, the next episode, we're going to talk about properties, the tax around properties. And the third one is around capital gains. If you're looking to sell or invest into Australian properties or other investments, what are the capital gains looks like? At the end of the section, which is a recap and also how to help you from our company as a mortgage broker and tax agent license to help you take advantage of the time while you're living overseas, potentially high income, and how to leverage your time and your income and to try to build a wealth back in Australia. So eventually when you are thinking of returning to Australia, there could be a better outcome for you. And I guess this is the main point for most of our expats while you choose to be overseas, to sacrifice the time and living with family is to be on a better result financially. Without further ado, let me just quickly share my screen. Yeah. So a quick question to start off, and maybe you can come back after you have looked into these sections to see how sure that you are about your tax residencies and what have you done to make sure you're in the right path and you're protecting yourself from Australia from a non-resident perspective. What we're going to focus today is simply to run over what does tax residency means, what is tax non-resident Australia, besides from the simple wordings, what are the more in-depth situation that the tax office will look into, and what are the consequences if you are not compliant, if you are being late, or you are not following your rules back in Australia, and how to get more clarity on your tax situation. And at the end of the section, I'm going to quickly talk about some future change, potentially good and bad on the same time, on how these might affect your tax residency in the future, if the new rules are to be established. There are some common misconceptions about Australian expats or overseas investors on their residency in Australia. Most people would thought, oh, now I'm living overseas, I automatically become a non-resident of Australia. However, that is not that correct. Simply moving and living overseas doesn't mean that you are now a non-resident for tax purpose. Because when we come to tax residency, we look at from a more wider angle. There are a lot of other factors that you still need to consider. And whether you can be confidently to say, yes, now I am a non-resident for tax purpose. This is what we're gonna go deep into it today. And also in some areas that are because I don't need to report my income to Australia. How true is that? And again, this is based on your residencies. If you are a tax non-resident, yes, you're right. Whatever you make overseas has nothing to do with Australia. You don't need to report your overseas income back to the Australian government. But if you are in the right path, right foot, that they somehow still see you as a tax resident in Australia, then you are putting your overseas income at risk because you're still under the net of worldwide income system in Australia for being a tax resident. Then whatever you earn overseas need to be declared in Australia. You are lucky if you are in a DTA country where they have a double tax agreement with Australia. You might only need to look at paying the difference. But if you are in a non-DTA country, you need to pay the tax again in Australia. Or in the way that if you believe that, oh, I'm now not living in Australia, so I don't need to submit a tax return in Australia. Again, this is incorrect. What happened is ATO will still need you to update them, because if you're not updating them on a yearly basis, they wouldn't understand what is your situation. Are you still remain as a tax non-resident Australia? So whatever you make overseas doesn't need to be reported, or you already come back to Australia, but you're still making income from overseas. So it is crucial in the way that you should update the tax office, even though you might not have income to be reported. It is important to still update the tax office on your tax residencies for a couple of reasons. One, for compliance. You don't want to put your overseas income at risk that you need to pay the tax in Australia and declare that income, or having issue with late submission penalties or interest charge if you need to pay any tax. And the record that I've done for my career as an accountant, the longest I've done is 25 years of overdue tax returns. So we were lucky. This happened many years ago. We were lucky at the time when we were helping the client to catch up on all these returns. ATO was okay. We provide them a reason why this was missed. Just because back then, when the information was not that transparent, a lot of expats thought that they don't need to do anything, but wasn't the truth. So we were lucky to get away from all these penalties. The client just need to pay back the tax on the income that she was getting back in Australia, mainly from the properties. So, but yes, there's another one thing that you probably want to look into, make sure you are on the right path, you are staying on top of your tax bill in Australia, not just the tax and where you live. So, what is the tax residencies? It's a legal status that determine where do you pay your tax and what sort of income that you need to include. It's very common when you hear the word I'm a tax resident, I'm a tax non-resident, that usually help you to determine what sort of income that you need to pay in a country. In Australia, we run the same system. If you're a tax resident in Australia, you need to declare your worldwide income. Whatever you make overseas is also taxable back in Australia. But if you're non-residents, then we are only focusing on the income that you generate in Australia. Most of the clients that I met simply they got income from their rental properties, they got income from interest, a term deposit, or they get dividend income from shares or mutual funds. These are the major income. Some might have still have employment. In Australia, they might get employment income. And why does tax residency matters? It's the same thing. If you are a tax non-resident, it would help to protect your overseas income from being taxable. And it also determine your obligations, whether you need to do a return, update the ATO for compliance reason. And also it's important to secure if you have any negative gearing losses from your properties. Especially now it's getting more and more important because a lot of rules are changing. For example, we just had one change, which is if you are now selling properties in Australia, you need to pay a reporting tax on any price point of property that you're selling. So it is now important for you to understand what sort of losses that you might have on the property. So eventually, when you are looking to sell the property, you can claim back any of these losses to offset the future capital gains. So save you the tax you pay in Australia. So, and this is why we are here to assist. Just on the rules right now, we are still looking current rules, and later I'll talk about a potential rule change. What the tax office is looking into is some rules that are written 80 years ago, which doesn't really fit into the modern world, but it is what it is. These are the ways that AT are looking into. The four main one, the 183 days test, the reside test, the domicile test, and the last one, the Commonwealth superannuation tax. And just be mindful. Some people would thought, oh, I'm a non-Australian, then I must be a non-resident for tax purpose. When we come to tax residency, we are not truly looking at what passport do you hold. It's more about where do you live. So it's more about the tax residency instead of the immigrant status on or passport holder or PR that you're holding. On the first one, the 183 days rule. So simply as what it is, what we are looking at is, do you spend more than 183 days in Australia? If so, you are most likely to be seen as a tax resident in Australia. There could be some exceptions. If say you are a temporary visa holder, you only spend time in Australia, you might be treated differently. But it doesn't. On the other hand, it doesn't mean that oh, I'm living less than 183 days in Australia. I'm 100% tax non-resident of Australia. In that area, we still need to look into other factors to determine as a whole whether you are a resident or non-resident of Australia. So if you for most of our expats, they do travel, stay less than 183 days, but I also seen cases that people may need to travel back for family, for business, which somehow get very close to 183 days, may end up between 120 to 160. So you want to be more careful when your number of days that you spend in Australia is getting higher and higher. You want to also be paying more attention to other factors to secure that even though you are now spending more time in Australia, but at least from other aspects, you are also protecting yourself to be a non-resident Australia. The second one, the reside test. What we are looking at here is where do you live generally? Are you living in overseas countries, Hong Kong, Singapore, UK, US, Middle East, or are you living back in Australia, but you just traveled overseas from time to time? Second one is the intention. I see this one quite heavily. What is your true intention and your purpose of you being living overseas? Are you wanted to be a non-resident for tax purpose? Are you only on a temporary visit on a 1 year leave that you want to on a working holiday in Italy, for example? Then that intention and the purpose of the trip becomes very important. That's what ATO assess very heavily on what would you like to do? What are you trying to do for this period of absence from Australia? They also look at the family or close personal ties from Australia. If you are residing overseas, what sort of connections that you still have with Australia? Are you truly showing that you want to be living overseas and reducing your ties with Australia? The last one, the domicile. And this one is the hardest one because ATO look into this one sometimes. They just simply look at here what I put down, domicile by origin, where you're born in Australia, you hold Australian passport. They deem you to be a domicile in Australia, so you are fall under the tax residence of Australia. But now with more cases we've seen, it can also be a domicile by choice. Where do you want to be? A domicile that you see you establish your permanent place of abode. And this is important. And when we say permanent place of abode, it doesn't mean that, oh, you must buy a property in a particular place. You don't need to buy a property in the US to be seeing that place is a permanent place of abode. We can also look at a long-term lease, 12-month lease that you're having in US that also can show that you are living your life, you're putting your permanent place of abode in the US, for example. What we want to do at the end of the day is to the establishment of your foreign presence. Where are you living? Where do you spend most of your time at? And the last one, which is less related, I think for most expats, unless you're still working for the Commonwealth government, if you're not contributing to the Commonwealth superannuation, then you probably won't fall under this category. And to go deeper into this, like based on the rules are rules, but what exactly the tax office are looking into. So there are three things that I always break it into, which is financial ties. The first one that we'll look into. What the financial ties ATO will be looking at is what sort of financial ties do you have in Australia? Do you own a property in Australia? If this is an investment property, holiday home, it's okay. People still ATO still allow you to invest back in Australia. But if you are retaining your main residence, your home where you were living before, vacant, you're not putting it on rents, that becomes questionable because they're still showing that, oh, you might want to come back anytime soon. There's always a place for you to live in, for you to stay if you need to come back to Australia. So that becomes an issue. How ATO look into it when it comes to properties connections in Australia. Another thing, I have cases as well that they look into how often do you send money back to Australia? Are you simply living your life overseas on a higher pay income, but eventually you are sending all the savings you have back to Australia on a monthly basis? Or it's okay if you still have a mortgage to pay off in Australia, so that's why you need to send money back to Australia. But what ATO will look further into it is, are you truly only sending the necessary amount, or are you sending more than enough? You're simply sending all your savings overseas back to Australia for various reasons. Maybe you need to support your family back in Australia, or you want to further invest, or like for personal, you just want the money to be sitting back in Australian bank. You don't trust the overseas banks. So these are all the factors what ATO look into. Usually my advice to my clients is try not to. If you can, try not to do show a money trail on a monthly basis to the tax office. Ideally, you might want to do it every 3 months, every 6 months, and just send a bigger lump sum, which is okay as long as we can establish you are a non-resident for tax purpose. And if you're only sending money back for mortgage repayments, we can always show to the tax office these are the savings that you make overseas, and you are only transferring money back to support the repayment of your property. Or in other occasions, there might be a case that you are still working for an Australian company. Again, that's another financial ties that ATO look into. So if you're staying with your Australian employer, but are opposed to work overseas, again, maybe on a temporary time frame, that is also another connections that ATO look into. The best is always to get a job overseas, so you reduce that employment ties back in Australia. The second one I log into is the social ties. Is your family or close network in Australia? Most of our clients are moving the whole family overseas, maybe just the parents that stay in Australia, which is okay because your direct family, and what we're talking about here is your partner, your kids, are they with you living overseas, or there could be cases where just the husband being away from Australia and the wife and kids decided to stay in Australia. I've seen many cases like this, which is again, in this scenario, you just need more attention to what you're doing. These need to be monitored closely and to separate the ties in Australia. Still, in Australia, what we do is individual tax return, not as family tax return. For example, like in the US, they can allow you to do a household tax return, but in Australia, it's always individual. However, ATO do take into account of the spouse or partner or family factors into some extent. And that's what they will be looking at, whether the family are with you or not. With proper management, this can still be done if you really need to be in a situation that you are alone by yourself overseas. Your family, your kids need to stay back in Australia. We can look into that further and see what you need to do to make sure you can be seen as a non-resident while maybe your partner back in Australia can remain as a tax resident in Australia. Other factors we look into, and there are many cases. I'm just putting some example here. Are you still voting for the government? Election is coming. Voting is an obligation that you need to do through the Australian society if you are a tax resident in Australia. So usually we'll recommend our clients to remove themselves from the electoral roll. So are not, you're no longer contributing or voting for the government. So you're showing that you are cutting your ties. And this can be easily done by filling out a form to the government to say that no, I will stop voting from now on. Please remove myself from the electoral roll. To maybe same as the medical systems. Are you still using the Australian Medicare, which means for anything happens, you can still come back to Australia and enjoy the welfare in Australia? Again, this is something they look into, how to strengthen your tax residencies. Maybe what you want to do is if you are planning of living overseas, just try to deactivate your Medicare card. So you are not linked to the system. You can always have it reactivated again eventually when you come back to Australia. You want to return for good. Last one, the physical presence. Again, to the question, how much time that you spend in Australia? Are you spending more than 183 or somehow close to the number? And this is what ATO look into. So this is the most direct angle that they look into. If you're more than 183, pretty sure, most likely you will be seen as a resident of Australia. If you're not, then still we consider other factors. And again, back to the intention. What is your intention and how long do you plan to stay overseas for? So in most rules or cases that we have seen is ATO looking at a minimum of 2 to 3 years of living abroad, which you can establish that you are living, you have your domicile overseas, you're living overseas, reside tests, you have a visa to allow you to stay in that country, you have employment lined up, and hopefully your family are with you in that country as well. So these are what ATO would like to see in terms of intentions or the purpose of why you want to be a non-resident of Australia. And the evidence, having an evidence, a place overseas would help. Again, like I mentioned before, it doesn't really need to be having or buying a property overseas, but what we would like to see is, are you on an Airbnb, which allow you to stop anytime? Are you on a short stay hotel service apartment? Or are you having a long-term commitment that you want to stay in that country for 12 months, 24 months? That's why you sign up for a long-term lease. So all of these are evidence eventually. If ATO come and ask, we can show them all of the proof that why you can be seen as a non-resident, because you're no longer using the welfare, you're not voting for the government, you spend minimum time back in Australia, maybe once or twice on a holiday to see the family, and you have your job, your visa, your family all lined up overseas, and you are planning to stay overseas for minimum 2 to 3 years. So all of these are evidence to show that no, that's why you can be seen as a non-resident of Australia. The consequences of not staying on top of your tax, which is putting yourself at risk again. What ATO will look into is if you are still on their record seeing you as a tax person in Australia, they could come back and ask about what sort of income are you getting overseas. And this is related to we call CRS, the Common Reporting Standard, which a lot of countries has now joined it. What they are doing right now is they're sharing information, tax information across countries, which means ATO might actually have access to whatever tax information you have in a participating countries. For example, Hong Kong, they would have access to your bank account. They would know the transactions to see what income are you getting overseas. And if they disagree that you are a non-resident of Australia, then you need to report those income and pay tax in Australia. And the worst part for that is Hong Kong doesn't have a double tax agreement with Australia, which means you need to pay your tax in Hong Kong, and you also need to pay another up to 47% tax in Australia. And the penalties, if you're late, there are late lodgement penalty, and this stack up. So it's 213 per 28 days. You can stack up to 5 units. So it's a total 1,500 per year. If you're late for 10 years, that's 15 grand goes to the tax office. And also there could be an interest charge on your overdue tax that you haven't paid. You have been overdue for many years. The rate is at 11.34%. And it could be higher in the future. We'll see kind of the inflations and everything. And the legal part as well, you might be chased by the tax office. If the mail might be sent to your old address back in Australia, you just not realize. And in that case, there could be an audit if you are not responding to the mail, the letter from the ATO. They could have done a ATO assessment for you on your behalf to address on what income they see that you're having, and by sending you the notice of assessment to ask you to pay for the tax that you might be owing to them because you are not submitting your return, and they use their resources to find out what income you might be getting and what tax you need to pay. And also this missed the benefits, like I mentioned earlier at the beginning. You could have been not paying tax, protecting your overseas income, and at the same time, have access to the net gearings from your properties or other areas where you can save tax in the future. You could have built up some decent amounts of losses throughout the years that you haven't lodged your return. Eventually, if you're thinking of selling one of the properties, that you can use these losses to offset the tax at the end. And to probably just one last important topic, which is the rules that we are using right now, written 80 years ago, roughly. So it doesn't really fit into the modern world right now. And no one liked the gray area from the tax office without a clear indication. It's always arguing between the taxpayer and the tax office. So this is started from 2019 in that year's budget that the government was trying to bring up new rules on how these residency can be changed and to be easier to be adapted. And it's more black and white, no more gray areas and no more fighting with the tax office. So they were looking to bring in this the primary bright light test, which is for any individual who stay in Australia for 183 days, you are automatically a tax resident of Australia. So no argument points. We don't need to look at no, I only be there for business reasons or for whatever reasons you have to be. If you are there for more than 183 days, you are definitely a tax resident. And then they're gonna bring in a secondary test for those people who stay between 45 to 183 days. They will put you into this called 4-factor tests to see if you qualify for any 2 out of these 4 factors and you stay more than 45 but below 183 days in Australia, you will be made as a tax resident of Australia as well. And this is what the feedback from the expat community is that 45 is just too short. You might need to be there for unforeseeable reasons or for business that 45 is just putting the schedule too tight. So the feedback generally from the expat community is we are fighting for 90 days instead of 45. And I guess this is why we still haven't heard back from the government. So the last update was actually back in September 2023, more like almost 1.5 years ago, when the government had an open public consultation. So they are collecting feedbacks from the stakeholders. And since then, they have not have any updates. So probably they are still negotiating or talking about should it be 45 or should it be 90 days? But just take it as 45 for now for explanation reasons. So EB, the four factors, what they look into is, do you have the right to reside permanently in Australia? Which means, are you an Australian passport holder? Or do you have an Australian PR that allow you to live in Australia freely? So that kind of make all the Australian expats, yes. So you're gonna automatically take this condition because you hold the passport of Australia. The second one to look into is an Australian accommodation. Again, this accommodation referring to the home that you live for yourself to live in. If this is an investment property, it is not into considerations. It's okay for you to have investment properties in Australia, but what they are more looking into is there a place for you to live in that is live empty, that you can live in anytime. So I do have client come back to ask, oh, then should I still invest into Australian properties for investments? Would it trigger my tax residency back in Australia? If this is for investment purpose, it's okay. You can still invest into Australian property market and not trigger the tax under this one or under the current rules. The third one they look into is the family factor, whether your wife, your kids, your husband, your partner, are they living in Australia? And if so, the case I mentioned before, one living overseas, one living in Australia, that would then become a problem because that would then fall under the third rule, where your direct family are living in Australia, but you living overseas. And the last one, economic interest. They didn't give too much of definition on what these represent, whether investing into properties also represent an economic interest, or you need to be like running a business, having a bank account. It could be down to like just having a bank account in Australia, having a bit of saving there could also represent economic interest. This one we might need to wait until the final legislation to see more more example on what this actually means. But at least you can see, just for being an Australian resident and potentially have a bank account in Australia, could have made you pass two out of these four tests. And if you spend more than 45 days in Australia, then you are to be treated as a tax resident of Australia. But if the opposite, if you are able to control your dates to be definitely below 45 in Australia, you are definitely fine. We don't need to worry about the other factors, whether your family are, how often do you spend, which country do you truly need to stay in one country, or you can be a digital nomad. You can be traveling in between different countries and live in different areas throughout the year. You don't really need to have a domicile in anywhere else outside Australia, as long as you can manage your time to below 45. That also give, I guess, more clarifications. If you plan to stay less than 45, you want to make sure you can be seen as a non-resident. It is going to be easier under the new rules to determine your residency back in Australia. So it's been ongoing for 5 years, 25, 6 years now. We still haven't had a final decision on what the final legislation maybe look like, but I have a feeling just maybe this will be finalized in the next 1 to 2 years, maybe after the election. The government will come back and give more clarity on what the final draft looks like. If this is to be updated, and I welcome these changes because it does give more clarification or easier to follow for expats, that you don't need to again look at different areas and try to be a good boy. So we will keep you updated if we do hear anything from the tax office, and maybe we're going to do another series of webinars to go over if this is truly the new rules that we need to follow in the future. So stay tuned. So to the end of these sections, maybe just ask the same question again is right now, how sure that you are about your tax residencies back in Australia? Are you doing the right thing? Have you taken enough action to protect your status as a non-resident? And have you been updating the tax office? Are you on top of your tax? So these are all the questions, and I've seen too many cases that most people left that they just don't care anything further back in Australia, which actually you're putting yourself at risk to be exposed to the tax system in Australia. So to assist you on this, maybe here are a few steps you can look into and take action and see how you can catch up if you still have unlodged return or you're not sure about your status back in Australia. So if you have access to MyGov, try to log in and see what is your tax history with the tax office. Are they still declaring you as a tax resident of Australia, or are they already update you to be a non-resident? And um, review your record to see if you have anything still missing, or you have a bill missing to pay, outstanding, or you have years of returns that you haven't lodged, or if there's any discrepancy that ATOs just haven't updated you to be a non-resident, and just get clarity on where you stand and what is correct and to protect yourself. So act quickly before actually ATO look into it. My experience, and especially in the last couple of years, is ATO is getting smarter and harder to deal with. Back in the day, when we were still able to get a lot of remission waiver on penalties because we can explain to them, sorry, we were late because we were not fully aware that when we were living overseas, we still need to declare to the tax office and still submit a return in Australia. Back in the day, 5, 6 years ago, ATO was still okay to accept the reason, but now they are putting the responsibility on taxpayers. The response we get now when we try to ask for a remission or cancel a penalty, the feedback we get back generally is it is your responsibility as a taxpayer to keep yourself up to date on the rules that you should follow and to update the tax office on your record. So they are now declining on all these requests to try to get away from the penalty, get away from the interest charge. So yeah, look into these closely. And maybe what we can do from Odin is we can offer you for anyone who are attending the meeting today, we can offer you a free help check from the tax office. So what we would do and our team would do is we would help you to review your tax history. So by adding you and you giving us the authority to add you into our taxation portal, our system. So from there, we will be able to see what is your record with the tax office and whether you have any outstanding tax returns that you might still have income from Australia you need to declare, but you haven't. And we will come back to you with an update and give you a personalized action plan on if any years you need to catch up or if we do see any income coming from Australia, because they also offer a profiling report to show what information they hold inside ATO as well. So we can give you an update on that and to let you know whether what you need to do and how to catch up on your tax. And also to anyone who is new to Odin Tax and Mortgage, we are happy to offer you a 20% discount if you would like to engage us to help you to do your return and to do the catch up. So we're gonna put the link on the chat. So maybe if you are interested, just click the link and see what we can assist you and help you catch up on your tax. And maybe at the same time, feel free to drop in any questions that you have. We can come and have a Q&A section to wrap up so we can answer any questions to see anything you might need more clarifications on. Right, so I just still put this slide. I think I might need to end the slide first, so I can go back to the Q&A sections. Okay. So maybe I'll just try to answer some questions while people are still typing. So to Eric, which country are DTA country? There are around 40 countries um, with Australia that they set up a DTA. So like for example, Singapore, UK, US, China, France, a lot of the European countries, they also have a DTA with Australia. But to some, like say Hong Kong, the Middle East countries like Dubai, Saudi Arabia, Qatar, all of these they don't currently have a DTA with Australia. So you might want to be more careful if you are living in any of these countries. What tax would you prioritize? To David, what tax would you prioritize in case of one tax made but the others are not? I would say maybe the two, the reside and domicile, that where do you generally live and are you trying to establish a permanent place of abode overseas? If you do, then that's okay. Because at the end of the day, what ATO will look into is if you're not seeing Australia anymore as your home, what else? Where else are you seeing that as your home in outside of Australia? To a shop. What if you are sending money regularly to your super fund in Australia? How is that treated? Again, if you need to contribute to a super, I think that is okay. Still try not to, but if you have to, I don't think that would be, if you can somehow maintain your other connections in Australia to be the minimum, then having super contributions back in Australia would be okay. To Parisha, what would have would having an Australian number make me a tax resident in Australia? No, it would not. So again, just having a number, it's a small thing. You can still keep a number you might need for receiving SMS, for example. But if you're having again the other factors that I mentioned on the slide, then you might want to be more careful. For Daniel, what if you are sending money regularly to an offset account to reduce interest payment on an investment property? Ideally, like I mentioned, try not to do it on a regular basis. You might want to do it every 3 months, 6 months when you save up a little bit more and transfer at a time. Again, the purpose behind that, if this is to use to an offset account, then it is also acceptable because this is not somehow to support a family or someone else back in Australia. So it purely is again related to your mortgage and the property. Daniel, again, if you become a tax resident midway through the year, for example, moving back to Australia, do you pay tax on the full year's income or just the portions that you earned while in Australia? So we look at the cutoff when you become either a non-resident Australia or when you return to Australia and become a tax resident. We only look at when your status change. If you, in your example, you return to Australia midway 1st of Jan 2025, we're only looking at the income that you still receive overseas after 1st of Jan 2025. For whatever you make for the first 6 months overseas, that was earned as a non-resident, so you don't need to report that to the tax office. For Bino, how does moving overseas in middle of a financial year get looked at by ATO? So similar to the answer I just mentioned, it's okay to move midway. What we are looking at is the cutoff. And this is a year that your residency change, either from a tax resident to a non-resident, if you decide to leave Australia, or from a tax non-resident back to a tax resident if you are repatriating back to Australia. So we only look at what happened after your status change. To someone, how does the ATO treat if, as an Australian citizen, you may end up spending more than 183 days in Australia one-off in a year, that parents pass away to handle the handovers. Again, this is what, under the current rules, what they will look into is the intention for that 1 year. If you still have mainly all of your connections overseas, then it is okay. Because what ATO and again, but this probably will need some clarification with the tax office and how they look into your deal as well. If you can still somehow show that no, this is again for parents passing away, you need to come back and to handle stuff, but eventually you will be returning back to where you come from, then there's a room that we can talk to the tax office and try to get an exception that for that year you can still be seen as a non-resident because you have no intention to be returning back to Australia. The only purpose for why you need to stay this year is just to handle issues with family. For TISA, for the blight leg test, for the family factor, would they consider parents or siblings if they are not dependent on you as a factor? Or could you argue you have no dependent, you're fine? So far, what the ATM look more close into it is more about your partner and if you have any kids that is somehow dependent on you. If these are, say, the family, they're no longer dependent, then no, they probably wouldn't affect you because, again, they are adult, they're living their own life. Um, um, and for Winnie, is there a time bar for ATO to recover tax? There are timeline which is indefinite. As long as you haven't submitted your tax return, ATO can still come back and ask you the questions on to look into what you have not done. And that's why it's important for you to submit your tax return and get up to date on your status. So once you have submitted, it would also put a stamp on your tax, which is 5 years. If after 5 years, it's unlikely ATO can come back and challenge unless this is like a fraud. How does foreign resident capital gains withholding work if I sell my investment property as a foreigner? So I'm not sure if you have receiving one of our article, the email that we sent out just this in January, end of December. So there are new rule change where if you are looking to sell your property in Australia as a non-resident for tax purpose, now for any price point, you need to withhold a 15% tax at the settlement dates. So that is treated as your potential tax bill that you need to pay to the tax office. And if the way you can do is you can do a variation to change the rate from 15% to a lower rate, which require you to also complete your tax return. You know what the CGT calculation looks like. But yes, if you're thinking of selling, one of the tips I can give it to you is make sure your tax return is up to date. So eventually, when you need to do the variation to reduce the withholding rate, you are able to do so. Other questions. In my investment property has been rented out for the past 20 years, but I do not have any more ties with Australia. Would that be considered as a tax resident? No, if you only have investment properties in Australia and you are simply living your life in overseas and the record for you is 20 years, which is great. The longer, the better, because that just strengthen your position to be a non-resident of Australia. But still, as a non-resident, your obligation to the Australian government is you still need to report the income that you're collecting in Australia from your property, whether you need to pay tax or you can accumulate some of these losses to offset the future income. Still our obligation to catch up. But Lauren, if the husband is sending you money earned from outside of Australia to the wife in Oz, will the wife get taxed on this? It probably would not. Your wife probably would not get taxed because, again, this is not really an income for the partner, but because this is saving, but it might have an impact on the husband, who is residing overseas but keeps sending money to support the family. And we have cases before where one living overseas and sending pretty much all the net saving on a monthly basis back to Australia to support the partner and the kids. That's how ATO look into it and deem the person to be a tax resident of Australia because they clearly see an intention that you want to be back to Australia and seems like you only post overseas on higher pay, lower tax, but eventually moving all the money back to Australia. Amanda, what if you have a child in boarding school back in Australia, but you and your husband are overseas as an expat, non-residents, and wife return about 6 times a year for brief periods, short period of time to look after the kids, um, which is okay if you have your kids back in Australia. Again, what we look at is yourself. How often do you go back, and how long do you spend in in Australia for? In your situation here, maybe like 100 days, close to 100 days that you spend, which is somehow getting more concerning. But what you might want to do as well is make sure from other aspects that you can be seen as a non-resident. You're still keeping records and keeping up to date that whatever you still maintaining your life in Saudi, for example, and you only be back on short period of time and you have no intention of returning to Australia. For Julia, there are a lot of tests about family because yes, ATO look into family factor quite heavily. What happens if I don't have a family, for example, like partner, kids? Do they look at siblings? So I think similar to the question we answered before, no. Siblings, if they're independent, we would not need to look at that. And again, what we look into as well is the other aspects. Where do you live your life? How often do you go back to consider as a whole whether you'll be exposed to tax or not? For Benjamin, what if someone is a non-resident for tax purpose, but they still continue to acquire investment properties in Australia? What is the ATO's take on this? It is okay, like I mentioned, if these are purely for investments, it is okay for you to keep investing in Australia as long as these are all rented out. They are not somehow for you to keep as a family home that you can return at any time, any point of time, or uh, again, come back to other factors. If we can establish you living your life overseas, it really just the connections with properties that you have in Australia, it is just a one thing that they look into. Let me try to see if there's more different questions. From Bonnie, if I spend less than 45 days in Australia per year, then I'm not considered a tax resident, correct? I think you are trying to refer this back to the new rules, because under the current rules, it is still not a guarantee if you spend less than 45 days in Australia. They still need to look at the other factors to see whether are you truly a non-resident or not. But if the new rules are to be passed, then yes, if you spend less than 45 days in Australia, you will be a strict non-resident for tax purpose. A question here could be helpful. How can I check with ATO whether I'm considered as a non-resident or tax resident? So in Australia, it is self-declaration. So you tell the tax office what you believe your situation is, and it's only if ATO don't think you are the situation that you thought you were, then they will come back and talk to you to see whether they disagree on your residency or disagree on the information that you disclose. So that's why it's important that you consider or consult an accountant, a tax accountant to make sure you are in the right path, whether you are resident or non-resident, if they are helping you to submit your tax return. So you're submitting the right information and you have evidence to back up the claim, which is back to those questions we look at. The domicile, are you living overseas, work visa, a long-term lease, how often do you go back? So these are all the evidence. If ATO ever come back and want to do an audit on your file, you can always show to them, these are the reasons behind why I can be seen as a non-resident for tax purpose. All right, maybe I can try to answer two, three more questions, so we can wrap up. This is a question. Australian banks will hold 10% of interest on maturing term deposit. What country should receive it? So this is the, if you are non-resident, the 10% withholding tax on interest is the fixed rules in Australia. So you only need to pay 10% tax on interest. So this is slightly different to maybe the other income that you might be getting, for example, rental income. They are on a rate of starting from 30%, but interest income under the withholding system, you only need to pay 10%. And if your bank has already taken out the 10% tax, you do not need to declare that in your Australian tax return again. Do your tax return services include tax planning on assets held offshore for people looking to return back to Australia? Yes, we do also help in terms of advising and planning for how eventually one of the services that we offer is repatriation. If you are thinking of going back to Australia, it is important to understand if you're holding any of the overseas assets, what are the treatment if you decide to hold on onto this when you eventually return to Australia and become a tax resident. When you are again exposed to the tax residency rules, what information you need to declare to the tax office and what are the tax treatments on these overseas income or overseas assets. Okay. I understand there are still a lot of questions that we haven't had a chance to talk about. What we will do is we'll record down these and maybe I will send you to those people who raise the question. We'll do an email to you. But again, our team will send you an email tomorrow or by over the weekend or by Monday to catch up with you guys and to see whether if you would like to have a personal meeting to talk into your personal tax, we can do it from there. So thank you again for everyone. I can see some decent numbers who attended these meetings, and I look forward to assist you whether you are already a client of us or if you're not. We're happy to look after you for the time being if you are in living overseas or you're planning to become a expat yourself or eventually when you return to Australia. Okay, so if this is again different time zones, I probably just not say goodbye, good night. So thanks again for joining. I look forward to seeing you and assisting you in the future. All right, bye.